Namaste and welcome to the first Fireside conversation of 2021. My name is Hari and I will be your host for this evening. For those of you who are unfamiliar with the platform, Vichar Manthan, or VM for short, is a Sanskrit phrase which means the churning of ideas. Here, we look at ideas regarding the most pertinent issues facing our society and evaluate them under the microscope of Dharma and sustainability. So tonight's topic is titled, Is Decentralized Finance the Future of Money? Most modern countries have a social and political climate which can be described as democratic, yet that democracy has not transformed traditional institutions such as banks and financial authorities. The traditional system is centralized, with a few people in charge making most of the decisions. But has this system now become archaic, and are we on the verge of entering into a new phase of finance? The rise of decentralized finance and cryptocurrency is making large strides in being a part of day-to-day finance. Can the emergence of DeFi allow users to utilize financial services without the need to rely on centralized entities? Will DeFi augment or compete with the current traditional centralized system? And how does DeFi in its current format align to the classical ideas of Dharma? Does it benefit the greatest number? Does it minimize harm? And does it create a society that meets human needs? To help us discuss this topic, it gives me great pleasure to introduce our speaker, Lee Sager. Lee is a barrister whose practice includes trusts and estates, commercial advice and litigation, the administration of digital information, and the taxation of Bitcoin and other cryptocurrencies and token-related litigation. He's a member of the Society of the Trust and Estate Practitioners and the Society for Computers and the Law. Lee is the chairman of the STEP Digital Assets Global Special Interest Group. He is also the author of The Digital Estate. The digital estate provides an analysis of the rights and liabilities associated with digital information passing from, to, and through computing and other devices owned and controlled by fiduciaries, including trustees and personal representatives. For those of you who have just tuned in, tonight's Fireside on Is Decentralized Finance the Future of Money will consist of a 30-minute discussion between myself and Lee and a 10 to 15-minute Q&A session. And that's your chance to get involved. It's your opportunity to ask Lee anything you wish about this topic. I invite all audience members to leave their comments and questions on the YouTube live chat. Good evening, Lee. Happy New Year. It's a pleasure to have you on the platform.
Good evening, Harry. Thanks very much. It's great to be here. Thanks for inviting me.
Let's dive straight in. So we've got a lot to unpack. With your opening remarks, can you explain how you first got into the world of cryptocurrency?
Right. Well, I started to look into cryptocurrency as a result of the work that I do. As you know, I'm a barrister, and my field of work is wills and trusts and tax relating to those things. And I started to think about what happens to the stuff on my computer when I die. And I started to look into that about 4 or 5 years ago, when not many other people were thinking about these things and nobody really knew how to deal with that. And that led me to think about Bitcoin, which was starting to have an impression in the world at that time. And I had started to wonder, well, how does this work? And what are the legal consequences of its existence? And I studied that and I analyzed it and I learned a lot about the technical aspects of it. And over the last year, the world of DeFi started to come into existence. And DeFi is really a development of the technology of cryptocurrencies, of the Bitcoin type of crypto asset. And it's what it does really, it makes the financial system automatic. It automates the financial system without the need, as you mentioned, without the need for an intermediary. It decentralizes the financial system. So cryptocurrencies came into existence because people wanted to create money that didn't involve banks and governments. And decentralized finance is a financial system without involving banks and finance companies and governments. And so what's behind the DeFi is a bunch of very, very clever computer developers who come from the traditional finance system and are saying they are working with former financial advisors, and the financial advisors are saying, well, can you create a decentralized system that, for example, makes a lending or a borrowing facility, or creates something that exists in the existing financial system, but without involving banks. And they are doing this, and people are getting involved in it and are using them. And the impact is quite low at the moment because not that many are trying it, and it's still experimental. But it certainly is having an impact. And as we will probably discuss later, it's starting to have an international and governmental impact as well. It's very exciting, I think.
Okay, that's great. So, I mean, what can you do on this new platform? Can anybody use it?
Yes, well, that's one of the things about it. If I want to, it's only recently that you could buy and sell shares without involving a bank or a stockbroker or something like that. But you still have to have an account with somebody like that. So if you want to buy and sell shares now, you need to set up an account with somebody, and it's very simple these days. They have apps for that, and you can do that. But with DeFi, all you have to do is have some cryptocurrency and access to another app that has access to these systems. So everything is totally computerized, and there's no human beings involved in the transaction. So you become your own bank and your own stockbroker, and that's the idea behind it. Of course, the governments aren't going to let that happen forever. So there's lots of regulation coming in, and there's lots of thought about future regulation, because there are certain people becoming involved who are trying to cheat others, because that's the way of the world.
Okay.
But it's a great idea, but as with everything else, people spoil it.
Okay. I mean, we hear the term Bitcoin used quite frequently. So, I mean, can you just define Bitcoin for us? And what's the difference between Bitcoin and other cryptocurrencies?
So Bitcoin, before Bitcoin, there were many attempts to create an electronic money, and none of them worked because nobody got it quite right. The main problem was they couldn't stop somebody having electronic money and spending it more than once. But with Bitcoin, somebody came up with a great system, and it's called a decentralized, a blockchain, which is a distributed ledger, which enables people to stop double spending of this currency. But what it is really is it's just signals on a whole lot of computers. So there's no such thing that as Bitcoin that you can touch or feel. It's just electronic signals. But because of the magic of computer programming, people have created programs that you can run on your computer, and you can see what Bitcoin you own as if it did exist, and you could touch it and look at it. And there are many cryptocurrencies that are like Bitcoin that you can transfer. I mean, the great thing that Bitcoin is good for is to transfer value from one person to another. The developments that have happened since Bitcoin are that now as well as transferring value, you can invest value, you can lend it, you can borrow it, you can do all kinds of things with it. And that's the DeFi aspect to it.
Okay, I mean, so the UK only has 6% of consumers who use or own crypto. I think Turkey has 20%, Brazil has 18%, and Argentina has 16%. I mean, in Argentina, you can even use Bitcoin to pay for the bus fare. I mean, in the UK, you can't currently purchase any goods and services. So what's it actually making easier for us?
So one of the features of a system like Bitcoin is that although you can look at on the computer, you can look at all the transactions that take place using Bitcoin. You can see that X transferred 1.3 Bitcoin to B, but you don't know who X is and you don't know who B is, because all you can see on the computer program is a long number for each of them. So because of that, there's a kind of pseudonymity. Sorry, I can't say the word, but it's a pseudonymous. So each of them, you only know who they are if you can find out from some other way. And so people use that to transfer money to others without the government knowing. So in a place like Argentina, where the currency is devalued all the time, or you can't transfer your salary to dollars, and so you can't keep your currency stable, people buy something like Bitcoin so that they can stabilize their money, their capital, and also so that they can transfer money outside the country or take money from other countries. Brazil is the same. All of the countries that you mentioned, there are reasons for doing it because of the anonymity or the almost anonymity of using the cryptocurrencies. So some people use it for bad things like buying guns, buying drugs, and funding terrorism. But many people use it just so that they can sustain their capital and provide for their families.
Okay, I mean, in the future, do you expect us to be able to obtain mortgages or loans using the DeFi platform?
Yes. So the problem with something like Bitcoin is that it's very unstable. The value of it is very unstable. In 2018, in January 2018, the value of Bitcoin had gone up from about $500 for one Bitcoin to $20,000 in about a year. And in February 2018, the value had gone from those $20,000 down to $3,000 in about a month. So there was a big crash. In the last 3 months, the value has gone from about $6,000 up to, I think today it's something like $30,000. And and everybody's expecting, once all of the people who are now trying to jump on the bandwagon to make money, somebody who's got a lot of it is going to sell, and the price will crash again. Somebody will walk away with a profit and other people will walk away with losses. So there's a lot of instability, and possibly in a few months' time, the value of Bitcoin will be quite a lot lower. We don't know. I don't know. Nobody knows except the person who's planning to sell it. So, but what the DeFi system is producing is something called a stable coin, which is a similar kind of electronic money, which works in a different way from Bitcoin. It's much more sophisticated and builds on the Bitcoin system, but it has a stable value. So it's designed always to keep to a stable value, and most of them are valued at $1. So they might go up slightly up and down over $1, but generally they're at $1. And
Okay.
so that kind of thing will be built on to be used for mortgages, but not yet. But that's going to happen.
Okay, so I mean, do you think the high volatility of crypto then is dissuading consumers in purchasing crypto in case it leaves them with nothing if the price collapses?
I think there are many things that dissuade people from investing in crypto. And when you're talking about crypto, you meaning cryptocurrencies. The new thing, the new stable coins are not cryptocurrencies, they are crypto assets, but they are stable coins. Cryptocurrency is something like Bitcoin, which is the simple ability to transfer A to B, value from A to B. But people are reluctant to use those things because, firstly, because of the instability, secondly, because it's something new and it's just on computers and people don't really trust computers yet. I mean, that's going to change, particularly over the last 9 months, where people have had to sit at home and use their computers for almost everything, and they haven't been able to go out and do the things they used to do, and they have to do it online and on their computers. So people are becoming much more familiar with computers, and they will become much more confident about using computers and telephones, and particularly telephones. So you can use mobile phones, smartphones, to manipulate or to transfer cryptocurrencies. The other thing is that cryptocurrencies and smart stable coins and things like that are still fairly experimental. It's getting better, but it's computer programs, and computer programs do go wrong from time to time. So if you've invested all your money, or you want to invest all your money in a computer program, you got to be a little bit cautious about that. So the advice is only put in a little bit of money in if you want to experiment with it.
Okay, so you're thinking that the Bitcoin bubble will burst, and that's when these stable coins could then fill the gap. Am I correct in thinking that you think that?
I'm not actually saying that. What I'm saying is that something like Bitcoin, although it was designed to replace money, to be an electronic money or an internet money, it has become recognized as an ordinary investment. I mean, it's not ordinary in the sense that it's like shares or gold or silver. It's ordinary in that you put your money into it, it either goes up or down in value, and you either make or lose money. So a cryptocurrency like Bitcoin is just an investment now. The stable coins are the things that are becoming the new money. And it's over the last week, in fact, the American government has said that banks should start using stable coins as part of their monetary systems, as part of their payment systems. And now the Bank of England has also started talking about whether they should start using stable coins to create the new electronic sterling. Governments all around the world over the last year have started talking about electronic money, because that's obviously the things that's going to happen. Why should they keep printing £20 notes or £50 notes when everybody has a smartphone and they can use the smartphone just to pay using sterling? So at the moment, instead of using the Visa or something like that, where they are making money from all your purchases, if you're using electronic sterling, you can use it without making costing you money.
Okay.
And the other thing is that it's important for international payments, where if you make an international payment now, you have to pay people along the way. And the American government last week talked about banks using stable coins for international payments. So that's going to start happening in the next year or two. I mean, they've got to get everything right, but it will start happening.
Okay, I mean, you said that these stable coins were, say, pegged to the US dollar. I mean, if there was ever a destabilization in the global economy or from external geopolitical factors, would that not negatively impact and affect the stable coins?
Well, if the stable coins pegged to the US dollar, then if the US dollar goes down as against, say, sterling, then the stable coin will go down. But there are stable coins that are, so some stable coins are supported by US dollars in a bank. And so if you want to sell your stable coin, you get your US dollars back. And if there are 1 million stable coins in existence, then there's, in theory, $1 million in some bank account. Other stable coins are supported by other assets like gold or silver or other cryptocurrencies. And so there are many models. Many people are experimenting with many ways to do it. But the bottom line is, of course, whichever peg the stable coin has, that will depend, its stability will depend on that peg. So if it's pegged to the dollar, it will depend on the strength of the dollar.
Okay, I mean, what's stopping other players from entering the market and having their own stable coins and then potentially devaluing the stable coins that we've already got?
Well, people are entering the stable coin market all the time. JP Morgan has their own stable coin. The Bank of England will probably create a stable coin. But if you have a stable coin and it's backed and supported by actual value, whether that value be money in the bank or a gold in my bedroom or whatever, if somebody else creates a stable coin, that's not going to affect the value of your stable coin because you've pegged it and you've got assets to support that peg. If somebody else creates a stable coin, it's not really like the Bank of England printing a lot of money and making the bank, the sterling going down in value because they've printed so much value, or as it's called these days, they're doing other things. They're doing it electronically. But creating stable coins, if it's properly supported by some assets, that shouldn't be affected by other people creating stable coins. What will affect it is the use of that stable coin. So if, let's say somebody like Amazon created a stable coin and they said, well, you can use the Amazon coin to pay for our goods and services, then many people might buy the Amazon coin and other people might accept the Amazon coin in return for their goods and services because Amazon's such a big player in the world at the moment. And I'm not saying that they are thinking of this, but it's just a question of who wants to do it and how they do it.
Okay, that's great, Lee. So I can see a lot of questions coming through on the YouTube live chat. Keep them coming. We'll be moving on to the Q&A very shortly.
Okay.
So it appears then that the law is going to face some real challenges from DeFi, with DeFi looking to undermine the rule of law and replace it with technology with an idea that the code is the law. I mean, how would the legal system and the courts look to deal with any litigation which might occur due to disputes over cryptocurrencies?
Well, I mean, those are some of the most interesting questions involved in this. So one of the first questions that I was looking at, and that's recently become clarified by courts only maybe a few months ago, is whether a cryptocurrency like Bitcoin is actually an asset. And if I die and I leave £1 million worth of Bitcoin, am I going to be taxed on that? My executors will say, well, I heard Lee Sager on the VM talk saying Bitcoin doesn't actually exist. It's just a whole lot of electrons. Why should I pay tax on the Bitcoin that my late father left. And the answer is, of course, you have to pay for it, because the Her Majesty's Revenue and Customs aren't going to let you get away with that. And the courts have recently confirmed that Bitcoin, although it's just signals on a computer, it's actually an asset, and that has consequences like any other asset, and you can use it like any other asset. The interesting part of your question is, well, what about DeFi? If I invest £1 million by investing it in some DeFi system where I'm putting that money in and I'm lending that money to the system, I'm earning interest from that system, interest payments every day, and then I'm taking the money back. Well, it's difficult to say who I'm lending it to. There's no actual contract like a normal loan, because actually I'm putting the money into a machine and there's no person on the other side. So there's no contract that a court can bite onto. And so nobody can say that I am in breach of contract. And well, if there's no contract, well, what is it? And so this is something that the Law Commission of England and Wales is looking at the moment. How does that work? What are the legal consequences of it? Do we need to make some legislation to make sure that this all works properly? And these are the most interesting questions I find, because there are legal and kind of academic questions involved with that, and nobody knows the answers, although I have some ideas.
I mean, so how do you determine jurisdiction in terms of where, for instance, are the headquarters of Bitcoin and these other cryptocurrency organizations?
Right. So this is the mindset that you have to get rid of. It's a perspective thing that you have to think about. So normally with a bank, there is a building in some part of London, say, where there's a bank and you can go to that bank and talk to the people who work there. With something like Bitcoin, nobody owns the system. The system is just a bunch of computers with computer programs running on them. There's no central person who's controlling it. And so it doesn't actually exist anywhere. First of all, because it's just a bunch of computers in different countries. And secondly, it's just signals running on a computer program. And so there is no headquarters. And that's one of the questions. And the question of, for example, in my area of law, where you have to determine where some asset exists, where is it located? That's a very difficult question. And it's something that people are looking into. And the Her Majesty's Revenue and Customs have put forward some ideas on that, which I think are not quite right. But, there are things this is what people are thinking about.
Okay. I mean, you mentioned you had ideas on what regulations there should be. I mean, how do we go about making DeFi sustainable?
Right. So from about 2017, when the Bitcoin system started to become more sophisticated and more people got involved in trying to make money to defraud people, regulations started to apply to these systems. And that regulation has been lagging behind the systems, and they haven't got to the DeFi systems yet, but governments are working on it and they are thinking about these things. And over the last few weeks, the US government has made various suggestions that go some way to look at the DeFi systems. But because there's no central ownership, there's no building, there's no headquarters, it's difficult to regulate. So you have to regulate the users and not the person who's creating the system, creating the business. And that is the challenge for the regulators. But they will get there, and because they have to, otherwise it will run away from it. And the governments don't let those things happen. And I hope they do find a way.
Okay, I mean, regulation is both costly and time consuming. So how long would you think it would take to regulate?
Well, it depends how they do it. So at the moment, the biggest regulation gun that governments have is the anti-money laundering systems that they put in place. And over the last year, the EU anti-money laundering regulations have included crypto assets, cryptocurrencies, people who have cryptocurrencies businesses. And now from this month, people like that, businesses like that, have to be licensed, and that's going to go some way to making things better, to find out who are the people who are using these systems, instead of the long number that represents a person in the system, that you can put a name to that number and you can see who's stolen 50 million pounds worth of cryptocurrency, rather than just a number somewhere and you have no idea who or where he is. So money laundering is the biggest weapon at the moment, but there are other ways to do it, and I think that we should be confident that governments are thinking about it, and they will get it right. But of course, there are the people who don't want their money laundered or are doing the money laundering will also be thinking about it, and they'll be thinking about keeping ahead of the governments. And that's that age-old chase, the bad guy being chased by the government.
Okay, so do you not think regulation would not impact on personal financial liberty, when the idea of DeFi was to move away from the control of the centralized entities?
Yes, I mean it's just like the whole idea of cryptocurrencies, of crypto assets, of DeFi has been to avoid any interactions with governments, with banks, or with lawyers. But the reality of it is that you have to have that interaction, because otherwise the society could not exist properly. And just like with banknotes, banknotes are not that different from cryptocurrencies, because they are also anonymous. If I have a £50 note, nobody knows that I have that £50 note unless they see me with it. So the money laundering which tackled people moving between countries with suitcases full of £50 notes, it's not that different from the money laundering that tackles people moving electronic signals around the world that represent value. And, it's just something that society needs.
Okay, I mean, do you think then technology can play a part in a new way to design the regulation and for regulatory compliance?
Yes, I think it can, and it's already being used for that, because the new controls that are being put in place, people are designing software tools to comply with those controls. So they are putting those things into the new DeFi systems, so that the system can, for example, find out who is the new customer. Does he have proof of his address? Things like that. The know your client requirements can be put into technology.
Can you just define that, the know your client?
Well, if you go to a bank, if you want to open a bank account now, you need to show them your passport with a photograph, to say, oh yes, that's Lee there, and that's his name, and I can see that he's recognized as being Lee by the British government. You also have to show them a bank account, a bank statement to show that you live at the address that they think you live at. And so this kind of thing is important and is required for people to open bank accounts and all kinds of other accounts. And this kind of thing is being done using technology in the new systems.
Okay.
And you know, people are thinking about, I mean, as I said earlier, there are very clever people designing these systems, and this is one of the things they are looking at.
Right, okay, interesting. So do you think then that regulators need to be innovative in their thinking to ensure they don't stifle this innovation with arbitrary regulations just as the digital age reaches its peak?
Yes. So the way that the British regulators have been doing it is that they've been keeping at arm's length and allowing things to develop so that they don't stifle innovation, but but when they see something bad happening, they target that to try to stop it becoming more widespread in society. And I think that's the right approach. But you know, it depends on how things go. You know, if for example, in the pandemic, when things go bad, you have to take more severe actions. You know, so if things become bad with the crypto asset sphere, more severe actions will need to be taken. But at the moment, everything is in, you know, the amount of value involved, although it's in the billions, is very small compared with the whole economy. So that has to be got right, so that when it starts to become more relevant to the economy, it's already being controlled sufficiently that it doesn't affect the economy as a whole.
Okay, Lee, I'd love to continue this, but we've now reached our Q&A session, and thank you to the audience for sending in your questions. So let's take a few of these. So the first question is from Abhinav Kakar. Thanks for explaining DeFi. With cryptocurrency in picture, is it a correct statement to make cryptocurrencies has replaced the trust on central bank by processing programming power?
Okay. So I'm not sure what he's getting at, but I think I know. One of the things that the people who designed cryptocurrencies found most important was they tried to introduce trust into a system. So, for example, in the old days, if I went to the market and wanted to buy a horse, the person with the horse wouldn't sell me that horse unless I gave him something that he was satisfied with. So if I gave him a bunch of silver coins and he could bite them and say, "Oh yes, this is real silver," I'm prepared to give you the horse in return for these coins, even though I don't know you and I don't know I can trust you. So the trust and those transaction was in the coins. And for me, the trust was in the horse, which I examined and I was happy to buy. The development until now has been that the trust has been in the banks. So or the credit card companies. So if I take a credit card to my supermarket and I offer that in exchange for my groceries, the supermarket is happy to give me the groceries because they trust that the credit card company, once they've swiped the credit card through the system, the credit card company will give them the money at the end of the day when they present the bill. So the trust there is in the credit card company. The cryptocurrency developers said, we want people to be able to trust the system. So if I send £100 worth of Bitcoin to you, I'm going to trust that you will get it at the end of the day. And the Bitcoin system is one of those things that actually, in almost 99.999% of the time, you can trust it. And it may be more trustworthy than a banking system because a bank can go bust. But, you know, it's unlikely. But the Bitcoin system is very, very stable. There are things around the Bitcoin system that aren't stable, and that's where the thefts happen. But the actual system itself is very stable and very trustworthy.
Okay. So we've got another question from Deanand. So less than 10% of the currency is printed. Rest is all digital money anyway. What makes crypto any better than fiat currency or digital payments?
At the moment, it's not better. At the moment, as I said, something like Bitcoin is not really a currency. It hasn't got what they call a store of value. So a store of value means that if I hold a Bitcoin, it doesn't keep its value necessarily. It could go down tomorrow. So if I were to buy a car from you for 1 Bitcoin, you would be a fool, and I would be a fool to go through that transaction, because tomorrow the Bitcoin might be worth half that. So you will be giving me your car, and tomorrow you'll have only half of the value. Or I might give you the Bitcoin, and tomorrow, you know, if it goes down half the value, then I've come up with the car where I would have had half of the value if I haven't given you the Bitcoin. But with the stable coins, there is a store of value. And although they are not fit to be used yet, they will be after all of the kinks have been ironed out. And the difference between that and something like a credit card company is that the credit card company is looking to make a profit from you when it allows you to use its services to pay for goods and services using that credit card. And so, and also the other point that developers of cryptocurrencies were thought was important was a censorship. With a credit card company, they can stop the payment of that money to the supermarket if my account is not in order, or, you know, I've overdrawn or something like that. But with a cryptocurrency, there is no censorship. Either I have the cryptocurrency, or either I have the stable coin, or I don't. If I have it, I can transfer it, and the system will not censor my sending of that value. Excuse me.
Okay. I mean, does the system not have any vulnerabilities?
At the moment, there are many vulnerabilities. So it's a computer program, and computer programs can go wrong. You know, it's a very complicated computer program. And some of those systems have gone wrong in the past, but, you know, they're getting better at it, and they are ironing out those kinks as they go wrong, and they find out, you know, they're building on earlier systems. There is also, you know, as you say, it's all reliance on what's underpinning the stable coin. And so, for example, there is a stable coin which is very popular, which was supposed to have $1 in a bank for every stable coin that existed, but they refused to have an audit for that bank account. And so the stable coin went down in value because people thought, well, there wasn't a dollar for dollar ratio of security. But, you know, these things are capable of being sorted out. And I think that eventually, particularly if something like the Bank of England supports the stable coin, then you will be able to use that stable coin, which might be called pounds and pence, just like an ordinary pounds and pence in your pocket, but without paper.
Oh, okay. So we got another one from Raahul. Do you foresee the adoption of Bitcoin or some other crypto as a usable currency or a store of wealth like gold, or both?
I personally don't see Bitcoin ever being a currency. There are many people who are dedicated to Bitcoin, and they think Bitcoin is a very good idea, who think that it will one day be the world currency. But I don't, because it's just too unstable and it will never be stable enough. But I do see the stablecoin system becoming being the start of a future electronic system, electronic monetary system.
Great. So Prava's asking, do nation states really have the capacity to regulate Bitcoin, or is it inevitable that we need an international system of regulation?
Oh, we need an international system. I mean, there's no doubt about it. We need cooperation between nations, because because people using something like Bitcoin are living all around the world. And if somebody is hacking into a system that is tacked onto the Bitcoin system, remember the Bitcoin system is very strong, but there are other systems tacked onto it which aren't so strong. And so if you steal money from one of those subsidiary systems and you're living in a place that's not regulated, then nobody can touch you. So you need international regulation. I have no doubt about that.
Okay. I mean, how easy would it be to enforce the regulation?
It's the way that it will be enforced is in the system. At the moment, to get a bit technical, if I may, the system, the Bitcoin system, runs on a computer program that can be changed. But if you try to change it too much, then your changes will be rejected because other people running that system will reject it. So what governments have to do is to make sure all around the world that there are changes to the system that enable the regulation. And if all of the governments around the world are forcing those changes, then people can't stop those changes. And that kind of regulation will work.
Okay. So Bhavik's asking, what is the outlook for the increasingly environmental costs of crypto, Bitcoin mining? Is this a problem unique to Bitcoin or a broader issue of all cryptocurrency?
Right. So Bitcoin, as the first system, has this, the way that it operates uses a lot of electricity. And the story is that Bitcoin uses as much electricity as Denmark, which is just crazy. There are many other cryptocurrency systems that have similar operation with electrical, that uses a lot of electricity. But the newer, more sophisticated systems are starting to use other ways to secure their transactions. I mean, the use of that electricity makes the Bitcoin system very secure, but people are finding alternatives, and Bitcoin will soon be one of the only systems that uses that kind of electricity. And I think, in my view, and I'm not there are people who will disagree with me, but in my view, these newer systems that don't use that kind of electricity will go on to be the ones that are adopted for much more universal use around the world in the future.
Okay. So question from Ravi, is DeFi then just a temporary challenger to an existing system that pushes innovation and adaptation? Will it disappear once the centralized system is caught up?
My view is that, you see, one of the things about DeFi is that the developers and the businesses that are creating the DeFi systems are trying to mimic the existing traditional systems. But what they are finding is new ways to do things that the traditional system just can't do. They are making derivatives that just can't be made in the existing system, even though the existing system has made some crazy derivatives. But the new system is, because computers can do all kinds of crazy things themselves. My own view about that is that as soon as the traditional players realize that DeFi can be useful to them, they will, and I think they are starting to do that, they will start using some of the DeFi systems as part of their businesses. And what will happen in the end is that some of the DeFi systems will start to use traditional systems as part of their businesses. And eventually, I think there will be a merger where the traditional and the DeFi systems will be running a new financial system, as it were.
Okay, so we're not going to see DeFi take a path of its own then?
Well, at the moment, it's taking a path of its own, but I think that there will, it will become part of a financial system.
Okay. Lee, we've run out of time. I've really enjoyed this conversation. It's been very revealing. I think we could go on for another hour or two and go much deeper into this topic. But if we can now end on your closing remarks, and if you can touch upon how you see the evolution of DeFi, and are we likely to see a tech utopian vision of finance in the future?
I think that DeFi will evolve, and it's already starting to evolve and becoming more complicated. But at the same time, the people who are developing the DeFi systems are trying to make it simpler as well. So at the moment, if you think of a metaphor, the DeFi system now looks like the engine of a car. And if you want to get involved in the DeFi system, you have to know how to tinker with the engine. You have to know how to run the engine, or how to run the car with the engine in the seat next to you. What they're working on now is to put the engine under the bonnet so that people who want to use it can get into the car and just turn the key and press down the accelerator and move off. That's getting very metaphorical, but that's how I think that things will start to become when people will start to be using it. And I think that that's all good. At the moment, the whole cryptocurrency, crypto assets system is a little bit, the engine's a bit too exposed, but it's going to get better.
Okay, great. Lee, a special thanks to you for taking time out this evening and exploring this topic. It's been an absolute pleasure to have you on our platform.
Well, it's been a pleasure being here. Thank you very much, Harry, for having me. And I see you have a really good talk coming up about Dharma in a couple of weeks' time. Look forward to seeing it.
Great. Thanks, Lee. Thank you to all our audience for taking time to join the discussion. I apologize if we're not able to get through all your questions. Thank you to all our well-wishers, who without you, these events will not be possible. If you would like to become a well-wisher, please visit our website at www.vichardmanthan.org. On the website, you can also join our mailing lists and have a scroll through all our past events. You can now also access the VM podcast, a brand new project by the team at Vichar Manthan, hosted by VM fellow Sumit Sharma. The first episode is now on there and looks to explore and understand Dharma. Feel free to follow us on Facebook and Instagram to keep updated for future events and all our posts. We also hold weekly book clubs across our VM chapters. Our book clubs bring together all walks of life. They provide a space to earnestly explore and discuss ideas. And if you would like to join our book clubs, please get in touch via our website. And finally, our next event will be a panel discussion with Rajiv Malhotra and Amish Tripathi, titled, Could the West Ever Embrace Dharma? And that is on Saturday, the 23rd of January at 7 p.m. And I hope to see you all there. Please log in and register for the event on Vichar Manthan's Facebook page. I hope you have a lovely evening. Stay safe. Namaste.